Good morning. This is Tom Alexander. It is Sunday, November 19th. It's about 11 a.m. Eastern Time in beautiful Savannah, Georgia. Uh, we are coming into Thanksgiving week. Thanksgiving week is, holiday weeks are typically low volume. Uh, that does not mean there won't be substantial price movement. As a matter of fact, price movement can be exacerbated because of low volume conditions. Um, Price action next week is likely to be driven by economic reports. Of course, that's almost always the case. And in a situation where you have a low volume week, it can be, again, it can be exacerbated. So be aware of the 8:30 a.m. Eastern time frame. I think Fed minutes come out Tuesday or Wednesday. Be aware of that. And then obviously, uh, as we get closer and closer to Thursday, which is a holiday, then I think there's trade on Friday that will be sort of funky. You're going to, volume is just going to fall off the chart, and you're going to end up with all this air pocket stuff intraday. By the way, if you are finding value in this, please subscribe to the channel. Please like, make comments. All of these things drive the algorithms, and it helps me grow the channel, which I would much appreciate. Okay, let's take a look at the charts and discuss this a little bit. Let's see. Okay, we're going to start with the SPX, and I mentioned, I've been talking about this for well over a week, maybe a couple of weeks. There's really no quote unquote resistance from an auction market perspective until the summer high, and we're still there. We're only about from print high. We're less than 2% from that high. Now we're going to go straight there. It's well, we could, but it's unlikely. Now the what you see here, the percentage moves, is just to give some perspective on how far we've come and how quickly we have come to this point. We have had the most retracement we've had from print high to print low occurred in one day, and that was a 1.13% decline. This is really unusual. This is not how auction markets typically work. We're going to see a slowing of the trend. We already saw a slowing of the trend last week, and I'll get more into that and its implications from a trading perspective a little bit deeper into this report. By the way, if you go to the website, alexandertrading.com, click on weekend updates, you can see the charts from this, you can see the text from this, you can see previous weekend reports, and you can see what I said in real time at the time and how it played out. I don't use magic. I don't use predictions. I use my entire analysis and trading is based on auction market principles. Okay, so this is the SPX. Let's take a look at the NDX. Now, apologies in advance. This chart is busy. Those of you that follow me know I hate busy charts. It usually a busy chart usually tells me the person that constructed the chart doesn't have a clue what they're doing. Now, I want to emphasize there are no indicators on this chart. There's nothing on this chart that should be used as a prediction. It's simply for perspective. It's simply to show a relative move, a move. There was a ramp that occurred in April into the summer high that occurred in July in the NDX, and I have outlined that move and pieces of that move to sort of compare to where we are. And the thing that stands out the most is that the retracement so far off of this move, that so far from print low to print high, is a little over 13%. We've only had a 1.3 something percent retracement in the NDX, and like the SPX, it occurred in one day on the same day. So that's really unusual. This has been a panic move to the upside. This is basically, we're in a crash to the upside. Now, crashes always end, and they typically end abruptly. The less retracement you have and the more stretch this gets, the more likely it is that you get some sort of dramatic 3.5% drop in a day or day and a half or something. A more natural advance would be for this thing to slow to a grind and just start to grind higher. But if that occurs, you're also going to get more retracement during that grind than we've seen. So for that reason, I'm expecting a more two-sided market to occur one way or the other. We have all these gaps. And again, there's nothing magic about gaps, but you keep having gap up after gap up, and it's just showing the manic panic buying that cannot be sustained. But we've come a long way fast. We're not that far from the print high in the NDX to an all-time high. We're about 5% away. I'd be surprised if we don't make a new all-time high by the end of the year, unless something weird starts to happen and we make an inverted V top, some sort of exogenous news, events, etc. Okay, let's take a look at the Russell. The Russell is doing its own thing as it is wont to do. It's a long way from the summer high, but it has come a long way off of this low. That's all I'll say about the Russell. Now, short term, the Russell is more reflective of breadth, of NYSE breadth, than the other indices, just as a clue. We talk about this more in the live trade room during the week. That's all I'm going to say about the Russell. And then, of course, the Dow that I don't pay a whole lot of attention to because it's 30 stocks, and it generally is going to follow the SPX. The NDX, which I trade much more often, I'll occasionally take a trade in the YM or the MYM or a Dow ETF, but only occasionally. I typically stay in the SPX NDX world with my trading. Okay, let's take a look at this view. Now, this is the profile view of the ES. This is intraday. These are intraday profiles. They're basically 24-hour sessions. And you can see Tuesday's ramp. Now, beginning on Tuesday, this is a classic three-step auction market process on display. Classic auction market trading. So we had the ramp. This is step 1, step 2, and 3 right here. Now, you can't identify step 3 except in hindsight, but it's very clear this price stopped on a dime last Tuesday. And what we've done since then is just rotate around. So we are in a very specific phase of market development. So let's just combine this into the auction that it is. So all the trade from last week. Now I'm gonna keep Friday's trade out just because I think it gives a more accurate view. In the report that you see on the website, I have combined this, but I'm going to keep it out. So this is where we closed on Friday. And you can see, even if I were to combine this into this structure, and this is all part of the same structure, it's all part of the same auction. What you have is a very mature, for the stock indices, structure. You're going to have a sharp move that tests and or exceeds the upper extreme, or test and exceeds the lower extreme. And actually, you could have both, but that's another story. So how do you trade this? Well, one idea, okay, this is one way to trade. There's not one way to trade any market condition, contrary to what you see on Twitter and YouTube. There's more than one way to take the same trade setup, okay? I'm going to give you one idea. Take the break of the first hour of trade. If the break after the first 60 minutes of trade is to the upside, go long with a stop at the other extreme. If it's down, go short with a stop at the other extreme. Now, that's one simple rote way to trade this particular condition. Now, that said, this is a condition you want to be paying attention regardless of your facility with the market. The greater your facility with the market, the more strategy options you have available. You can delta neutral trade this using options. You can delta neutral trade this using futures and options. There are a number of different ways you can trade auction market principles. There's no one rote way to trade the market, okay? So this is a very specific market condition, and I expect to see next week the upper extreme or the lower extreme of this structure taken out. And here you go. Now this is where we are. This is where we close. Let me get rid of this. This is the close right here. So we're in the high volume node of this very mature structure. All right. Now let's go out in time frame a little bit. Let's go to the daily view. And I'm going to get rid of the annotations. Now what we're looking at are auctions that are chronologically defined by each month. So each month here, each profile unit is 1 month. And if you are looking at this month's trade, this is a very unusual shape structure, meaning you have what appears to be a very incomplete, a very narrow high volume node. Typically, your high volume nodes are more like this or this or this, even in vertical moves. So I have outlined a couple of paths that this market can take. You can see that on the website, again, alexandertrading.com, go to weekend updates, and you can see the potential paths that I've outlined. But what this is telling me here, if you combine this to the shorter term work that I just showed you with the structure of the larger degree work, you're looking for a sharp move next week, up and or down, down and or up, okay? And it centers around that structure that was formed from Tuesday into Friday's close. Okay, what else can I show you here real quickly? All right, this is NYSE data below. The red is a 10-day moving average of NYSE advancing issues. The green is a 5-day moving average of NYSE advancing issues, and below here is breadth. There is nothing bell ringing about this, as I put in the report. Sometimes this can be very, very useful and give us clues. It is somewhat of a blunt instrument. It cannot be rote traded. It's not magic, etc. There's nothing, again, particularly bell ringing about this that would have me looking for anything in particular. On the other hand, if we go down in time frame to the 30-minute SPX chart, we have breadth below this structure. Now, and this is one of the more useful perspectives from a trading perspective, at least from that I use. And what you're looking for here, this was a momentum peak. This was an extraordinary momentum peak that typically you see higher highs and higher lows, or a series of higher highs and higher lows. And also you have a level down here. Now in a bull leg, when breadth contracts to this level, regardless of where price is at the time, and in different price levels and different magnitudes of price movement, has to be read in real time when this level is reached to really benefit from this. We cover all this in real time in the live room. But in general, when breadth contracts down in this level in a bull leg, you're close to a price low. I mean, you can see it. You can see it here. Well, that's not what I wanted. Here we go. Okay, you can see it here. You can see it here. And now what you're looking for are a series of higher highs and higher lows, where you generally make lower highs in breadth and you make higher highs in price, but your retracements are likely to get deeper. Now, that's a general guideline, but it's really, really helpful, this view when you are trading. I use this in my swing trading. I use this in my position trading. Okay, guys, have a wonderful Thanksgiving weekend. Those of you in the U.S., the rest of you enjoy your holiday week. and a break from trading, at least the U.S. markets on Thursday. Again, the markets will be open Friday, but if I were you, I would find something better to do than stare at the screen all day, which is certainly something I'm going to be doing. Enjoy your weekend. And again, if you would be so kind to subscribe, like the video, make comments. You guys have a wonderful week, and I will speak with you again next weekend.